Here is a tool query to gather the latest information. Recursion Pharmaceuticals, ticker RXRX, is currently trading live at $6.68, which is a massive surge of 13.99% or $0.82 in today's intraday session. The stock has been on a tear, hitting a high of $7.18 earlier today against a low of $6.21, showing just how much volatility and interest is churning in this name right now. Now, before you dismiss this as just another speculative biotech company catching a ride on the general artificial intelligence wave, you have to understand what is happening under the surface. This 14% jump isn't just random retail excitement. We are seeing staggering trading volume, multiples of its daily average, and this move is colliding with one of the most significant metrics for this stock, a massive, and I mean massive, short interest. This isn't just a story about a company. This is a battlefield between high-conviction bulls and a deeply entrenched army of short sellers, and today, the bulls are staging a major offensive. The common expectation for a stock like Recursion is that it's a binary bet. It's a high cash burn, pre-profitability tech bio company. Many investors, perhaps those doing self-investing for the first time on the Robinhood app, look at its chart and see something that looks more like Tesla stock in its early days, all promise, no profit, and wild swings. To make matters worse, the market just saw SEC filings showing the CEO, Chris Gibson, sold a block of shares just a couple of weeks ago. The surface-level expectation is clear. High risk, burning cash, and the CEO is selling? That sounds like a signal to stay away. But the reality of this situation and the reason it's exploding 14% today is far more complex and completely contradicts that simple narrative. The reality is that the CEO sale was likely a planned 10b5-1 transaction, a pre-scheduled sale that has little to do with the company's immediate prospects. The real story is that Recursion has been making massive strategic moves, including acquiring one of its key rivals, Exscientia, and expanding its deep partnerships with pharmaceutical giants like Bayer and Roche. Today's 14% spike isn't a reaction to that old insider sale. It's the market suddenly and violently repricing the value of these strategic wins, all while a staggering 31.88% of the company's entire float is held short. This is the perfect storm for a short squeeze. Let's break down this market action because it's truly intense. The trading volume today is enormous. We're talking tens of millions of shares changing hands, which dwarfs its typical average. This isn't just Robinhood stock trading. This is the kind of volume you see when large institutional desks, the ones using sophisticated interactive brokers platforms, are moving in or out. In this case, it looks like they are moving in, or more accurately, the shorts are being forced out. When over 30% of a company's shares are borrowed and sold short, those traders are betting the price will go down. But when positive news hits or a new wave of buying comes in, the stock starts to rise. The short sellers, who are on the hook to buy back those shares eventually, start to panic. Their stop losses get triggered, they are forced to buy back shares to cover their position, and that buying pressure creates more buying pressure, which pushes the stock up even faster. That is what a 14% move on this kind of volume looks like. The implied volatility in the options market for RXRX is also extremely high, meaning traders are paying a premium for both calls and puts, betting on even bigger swings. This is not a safe, stable investment like buying Fidelity ETFs or putting your cash into Schwab Intelligent portfolios. This is the high-stakes, high-octane side of the market. This separates RXRX from the generalized AI excitement that has lifted NVIDIA stock to the stratosphere. While Recursion is a heavy user of NVIDIA's advanced chips, they operate one of the most powerful supercomputers in the private sector. It's not just an AI AI company. It's a drug discovery company that uses AI as its core engine. The market expectation is that AI is just a buzzword. The reality is that Recursion has built an industrialized, automated factory for biological discovery. They call it the Recursion OS. In essence, they use robotics to run millions of biological experiments on human cells every single week. They'll take cells, model a specific disease, and then apply thousands of different compounds, taking billions of images to see what happens. Their machine learning models then analyze this massive data set to find patterns and identify potential drug candidates that a human scientist might never even think to look for. This is not a theoretical concept, it's a running factory. This is what has attracted their big-name partners. And those partners are the core of the bull thesis, trumping any concerns about insider sales. Recursion has two ways of advancing. First, its own internal pipeline of drugs for rare diseases and oncology, like REC-994 and REC-2282. But second, and arguably more importantly, are its collaborations. They have a massive deal with Bayer, focused on precision oncology, that could be worth up to $1.5 billion in milestone payments plus royalties. They have another huge collaboration with Roche and Genentech in neuroscience and gastrointestinal oncology. These aren't just press releases. These are multi-billion-dollar pharmaceutical giants who have looked under the hood of Recursion's platform and decided to write enormous checks to gain access to it. The recent acquisition of Exscientia, another major player in this space, signals that Recursion is in consolidation mode. They are moving to become the dominant platform partner for big pharma. That's the reality that is challenging the old cash burn expectation. Of course, the risks here are just as significant as the potential. This is a brutal industry. The vast majority of drugs that enter clinical trials fail. Recursion is burning through hundreds of millions of dollars a year. Their latest earnings report showed a loss of $1.79 per share. This is not Apple stock, which prints profits every quarter. An investment in RXRX is a bet that their AI-driven industrialized approach can fundamentally change the terrible odds of drug discovery. If they can, and if even one or two of their partnered or internal programs hit, the upside is astronomical. If they can't, and their clinical trials fail, the cash burn will become a serious problem, especially in a high interest rate environment. For an investor doing online investing, this is the definition of high risk, high reward. It's the kind of stock you might add as a small speculative position in an individual brokerage account, while the bulk of your savings sits in Fidelity mutual funds or a SoFi robo-advisor. You wouldn't be using SoFi Invest to put your life savings into this one. But today's action shows the market is willing to take that bet, fueled by the squeeze. When you have this much short interest, any piece of good news, a new partnership, an acquisition, even a positive sector-wide move can set the fuse. The people using the Interactive Brokers trading platform are watching the short share availability and the borrow rate fees, and they can see the squeeze playing out in real time. The retail trader on the Robinhood app just sees the stock is hot and jumps on, adding more fuel. This is a classic tension. The shorts are betting on the long-term expectation of cash burn and failure. The bulls are betting on the reality of the strategic partnerships and the acquisition, and they are using the short position as a technical weapon against them. Looking forward, the picture for Recursion is all about catalysts. The expectation is a long, slow wait for data. The reality is that data could drop at any time. We're watching for updates from their internal Phase 2 trials. We're watching for any news from Bayer or Roche about optioning a new program, which would trigger more milestone payments. And we're watching the integration of Exscientia. Can they successfully merge these two complex AI platforms? The analyst community is split, with a hold consensus, but target prices range widely, showing just how little agreement there is on how to value this company. Some see it going to $3, others to 10. It's a company that Fidelity Wealth Management might be cautious about, but one that more aggressive funds are actively trading. This is where investment help from generic investing sites fails. You have to understand the specific, nuanced story. This brings me to a question for all of you watching this. We see a 14% move, but we also see a 31% short interest. Comment below with your thoughts. Is this 14% jump a genuine re-rating based on their AI platform and partnerships, or is it just a temporary short squeeze that will give back these gains? I'm curious to read what you think. So, to wrap all this up and put that $6.68 price tag in perspective, the market's lazy expectation of Recursion Pharmaceuticals was that it was just another struggling speculative biotech, confirmed by a recent CEO share sale. A simple story. But the reality we're seeing today with this 14% explosion on massive volume is that the market is rejecting that narrative. It's focusing on the reality of Recursion's strategic dominance, acquiring a major competitor, and the reality of its deep validation from the world's largest pharma companies. And technically, it's the reality of a 31